Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, India is the fastest growing market for a natural diamond in the world, and that's why De Beers Group is betting big on the country. De Beers is also leveraging blockchain technology to test diamonds and underpin consumer confidence. Joining us on the show is Al Cook. He's Global CEO, De Beers Group. Thank you for being with us, Al. And first of all, the last couple of years haven't been so strong when it comes to prices or demand for the diamond markets. How's 2025 shaping up for natural diamonds?
What we're seeing in 2025 is stabilization of the diamond markets, which is quite remarkable considering the volatility across the world. And what we've seen so far this year is some growth, particularly in the United States, in fashion jewelry, some small declines in bridal jewelry. Overall, US independent jewelers showed around about 8% increase year on year in April. So some signs of growth, but it's going to be a long, slow recovery for the diamond markets.
Al, it could be a slow, long recovery for the global markets, but what are your plans in India, especially with Forever Mark? And how are you also dealing with marketing campaigns and collaboration, especially with the Indian partners?
So our plans in India are really exciting. We are launching our new retail brand called Forever Mark, and that will be launching in Mumbai and Delhi and expanding to more than 100 stores after that. We're also increasing our investment in our Institute of Diamonds here in India, because this is the world's best place, the best technology at telling the difference between real diamonds, natural diamonds, and synthetic diamonds and fakes. So we're investing in India in that. We're also investing in marketing in India. We know that India is somewhere that has been in love with diamonds for thousands of years. And as a new aspirational middle class of Indians comes forward with the growth in India's economy, we want to create their desire and reinforce their desire to wear diamond jewelry.
Sure that. And also give us your sense on Indian diamond jewelry demand growth itself, because we do understand that the penetration is anywhere between 11 to 20%. What has been your own calculation?
We see at the moment that India's demand for natural diamonds is just under $10 billion per year. Over the next few years, we see that growing double digits with the potential to double by the year 2030. And that's really driven by the booming economy of India and by the rise of a middle class who aspire to own and to wear beautiful diamond jewelry. Traditionally, India has been a place where people buy gold for jewelry, but now we see more and more people, particularly to celebrate milestones beyond weddings and beyond marriage, they want to buy diamond jewelry. So we're very confident in the growth of the Indian market.
That's about India, but what also has been the demand and market size like in the bigger markets like China, US, where we do see a lot of tariff concerns right now. Also, how do you look at the Middle East? Because that is a market that seemed to be growing in the last couple of years.
In 2021 and 2022, during COVID, we had record growth in diamond demand, and then that fell off in 2023 and 2024. In 2025, we're seeing different trends in different countries. So in the United States, we're seeing broad stability, some growth, but broad stability. In Europe, the same kind of trend. In China, we see continued decline in demand, really driven by some challenges in Chinese economic growth. In India and the Middle East, we see growing demand, particularly in India, which is the fastest growing center of demand on planet Earth. So we're really excited about the growth in India.
And you mentioned about the lab-grown diamonds earlier, and that did make a disruption in last couple of years in 23-24, where we were hit by a slowdown in the global markets, the weak Chinese demand, and then the lab-grown diamonds as well. In the last year or so, would you say that the markets have settled now? There is more awareness and people have an understanding of both the varieties.
What we see on lab-grown diamonds is that the prices have really split. So today, you can buy 20 lab-grown diamonds for the price of one natural diamond. They're truly very, very different products. So what that means is people buy a lab-grown diamond if they want something cheap, if they want something fun, if they want something fashionable, and they buy a natural diamond because it's rare, because it's unique, and because they want to really commemorate and celebrate the most important moments in their life. So we see lab-grown and natural as really two different products. And when Indians look at those, they're very conscious that the two different products, lab-grown and natural, have very different values and a very different spirit about them. The Indian consumer is very discerning and really understands the difference between high-quality gold and low-quality gold. They really understand the difference between natural diamonds and lab-grown diamonds.
Well, that is very well understood, Al. But do you see any, if at all, impact of tariffs on diamond and diamond jewelry in the global markets, and any impact of that for the Indian markets then?
So, natural diamonds are not found in the United States, and they never will be, because the natural diamonds never formed in the United States. So there are no United States diamond mining jobs to protect. So we believe that the United States will exempt diamonds from tariffs, because in effect, the only effect of diamond tariffs is to increase diamond prices for US consumers. We know that Americans love diamonds, and we know that the United States government is very focused on what's best for the American citizens. So we're very confident that diamonds will be exempted from tariffs. We're also very pleased and very impressed by the leadership that the Indian government has shown in their negotiations with the United States on tariffs, led by Commerce Minister Goyal. And his strategy of engaging with the United States is proving very successful. So we're very confident that he will create a United States-India tariff deal that also reduces and removes tariffs from diamonds.
Also, the Kimberley process meeting has just recently concluded. What do you take away from that?
So the Kimberley process is very important. It's really given consumers around the world confidence that their diamond will never be a source of conflict, and that's absolutely vital. Now, the world has developed a lot since the Kimberley process was formed, so we need to expand the definition of conflict and of conflict diamonds to make sure that we really focus consumers on buying ethical diamonds. We in De Beers want to go beyond this, and we want to produce the most ethical, responsible and sustainable diamonds on planet Earth. We're very proud of the countries that our diamonds come from and the way that we produce and recover those diamonds. So we're working with an organisation called CIBJO that is really setting very high standards for responsibility, ethics and sustainability, and we're going to seek to make our diamonds the most responsible, sustainable and ethical on planet Earth.
And we'll wind down this conversation with one final question, and this one is on diamond traceability. We do understand that a lot of use of blockchain is now done in diamonds for traceability, especially given the fact that we're looking at so many sanctions and Russia clearly basically out of the market as well.
Consumers around the world want to know where their diamonds are from. So we in De Beers have developed a new blockchain technology called Tracer, which tracks a diamond all the way from the place that it was mined to the shop and the store where it's bought. So customers can now buy diamonds with confidence that they know where a diamond is from. Now, in political terms, that's also important for governments because they can choose where their diamonds are from and where their diamonds are not from. And we're working together with the G7 to ensure that De Beers diamonds meet all the requirements for import into G7 countries.
Well, amazing work being done when it comes to diamonds there, Al Cook. Thank you so much for joining in. He's the global CEO at De Beers and tells us that 2025 seems better than what we did in 23 and 24 in sense of demand as well as prices. Well, let's now shift focus from diamonds to precious metals, and gold prices are trading off its all-time highs of $3,500 per ounce. This is after the US President Donald Trump joining us has talked about tariffs there. Joining us now to talk about the outlook for gold is Harshal Barot. He's Senior Consultant, Metal Focus. Harshal, hi, thank you so much for joining in. And we've seen some profit taking and we seem to be holding around those levels right now. Would you say that it would need a more bigger trigger for the gold prices to go either ways from here?
Yeah, definitely. I think, Manisha, because some of the short-term triggers in the market, I think they've already been factored in terms of tariffs. I think the global markets are still in a waiting game. Because we are in a period where one day they're announced, the next day, they are recalled or paused. So I think until July, when a lot of these deadlines are due, I think we could see more of a sideways movement as far as the gold price is concerned. But given that there is still so much uncertainty around all these negotiations, there is still so much uncertainty about the US fiscal outlook. I don't think the rationale for holding gold has changed much. So, short-term profit taking aside, I think the overall picture still looks very, very positive.
Harshal, what is the sense from Metal Focus now, your in-house view on where the gold prices could be by the end of this year or the next?
So we still see gold prices making new highs. So we are looking at 3,800 to $4,000 levels for the gold price in the next 10 to 12 months going ahead. As I said, going ahead, even the U.S. rate cut story will turn supportive for gold as we go ahead, and the true impact of tariffs on the U.S. economy and the global economy will also become visible, further down the line. So I think all these factors will continue to support the diversification argument as far as gold is concerned. So we are definitely bullish, at least from one perspective.
For the Indian markets, Harshal, we usually see an import of around 700 to 800 tons. That has been a norm, plus minus some. What is the expectation for this year with the all-time high prices, slowdown concerns, weaker retail buying? Are you tinkering with that number?
No, definitely. I think we could definitely have a sort of negative impact on demand if the prices stay higher, which we expect. So as you rightly said, the average Indian imports, consumption, if I would say, is anywhere around. If I talk about jewelry consumption, it's around close to 600 tons. Investment demand is anywhere between 150 to 250 tons annually. So what we are seeing over the last year or so is that even the jewelry demand in India is falling because of the high price, but investment demand has been holding very strong. So we think a similar story is likely to play out this year as well. In absolute terms, definitely consumption could be down by anywhere between 5 to 10% compared to last year. But I think given the price, that will not be a very bad outcome.
Harshal, how would you look at the Indian buying this time around? Because we do understand that a major part, and this is something that we've spoken earlier as well, it's not so much to do with rural India now. The urban India seems to be buying more gold, would you say?
Yes, definitely. I think if you look at the price itself, gold is basically out of reach for a lot of Indian consumers at these price levels. And if you look at average rural incomes, definitely I think there is going to be pressure as far as rural consumption is concerned. And if you look at commentary also, from some of the jewelry companies, they also keep saying that it's the middle and upper middle class which is driving gold consumption at the moment. So I think that's definitely a factor to watch out for going ahead as well. But again, as I said, jewelry demand could definitely be impacted also because of the fact that we are seeing a lot of shifts towards lower carats in jewelry. So typically the 22 carat plain gold segment is shifting to 18 carat plain, and the 18 carat studded is shifting towards 14 carat studded. So we are definitely seeing that as well happening in the market.
Harshal, also, what is your sense with silver there? What is the kind of import that we can anticipate for this year now?
So silver demand, I think, last year for a couple of months, it was way above average because of the India-UAE SEPA, and some of the flows came in because of those reasons. This year, I think we see more of a normalization in silver demand playing out. Some of the factors that we see in gold in terms of pressure on weights of the jewelry and articles that are sold that are visible in silver as well. We are increasingly seeing, silver articles and silverware being made in lower weights than they were typically because of the high price. So definitely that's going to be a pressure on volumes per se. But I think even the investment sentiment in silver, like with gold, is positive. So even though we may see silver jewelry and silverware demand suffer this year, I think silver investment will still remain resilient.
Harshal, while we talk about gold as in sense of imports, which happen between 700 to 800 tons, silver really has been volatile in sense of import numbers as well. 3,000 tons some year and 7,000 and then 8,000 plus as well. Is there any number that you guys have put out for this year as an estimate?
I think we would stick to the average that we have over the last few years, close to around 5,000 tons. 3,000 was an extreme low and 10,000 was, I think, on the extreme side, very high. So we think we would be somewhere in the middle of those two numbers this year.
Harshal, when it comes to jewelry buying, and most of the jewelers tell us that the first quarter of this calendar year wasn't so great, and this quarter yet again has started slightly on a weaker note. You've talked about 5 to 10% of a discount in sense of volumes. This first half clearly would have a bigger hit. Second half, do you expect those numbers to start picking up?
Yes, I think our expectation is that we will see in the second half of this year. Typically, what we've seen, over the last 2 or 3 years is that we see this concentrated phases of demand emerging in the market. So, second half of the year has a lot of festivals and, more concentration of weddings in India as well. So I think some of the deficit of the first half would be offset in the second half when we expect, consumers to return to buying.
Okay.
This quarter, again, as I said, it's a seasonally weak period. June, July, typically you don't see too much weddings
buying.
happening in India as well. So, yeah.
So before we let you go, a final quick answer on silver, price estimates there?
Silver, if I talk from a slightly longer term perspective, next 2 to 3 years, we are definitely seeing, prices close to $40 being achieved easily. As I think it's been discussed very widely over the last couple of years that the market is in a deficit. So, as those deficits start playing out in the physical market, some of the inventories that are already there across the global market, once they start to come down and we see an actual physical deficit playing out, that's when the real price rally in silver will begin.
Fair point that. Harshal, thank you as always for joining in. So gold and silver prices both quite bullish on the higher side. The demand may suffer in sense of volume, but not in sense of value. And that is a positive one going forward for the markets. Well, on that note, it's time for a short break, but don't go anywhere. We have a special guest from AP Moller Maersk joining us on the other side of this short break. Welcome back, and joining us on the show now is Bhavik Mota. He's Director Head of Ocean Products South Asia at Maersk. Bhavik, hi, thank you so much for joining in. And the first quarter numbers are on the higher side, export and import, both of these. Where do you see the maximum growth coming in from?
Thanks, Manisha. Thanks for having us. So if you look at from an India export perspective, the growth over last year, same quarter is 19% on exports and around 9% on imports. But you have to take these things in perspective. Let's not forget last quarter, 2024, we had Red Sea crisis, so the volumes were quite subdued. And also this year, we had an enhanced capacity into Europe and North America. So when you see this kind of a growth, it's a combination of volumes normalizing and also the added capacity that we have. Also, if you see from a growth perspective, it's around the three key segments, if I may call that. It's the retail lifestyle, it's the auto, and it's the refrigerated cargo, which is basically showing us the growth. And also from a markets perspective, it's mainly the US, the Europe, and the Middle East, which are showing phenomenal growth for us.
So just coming back to those numbers, how would you look at India vis-a-vis the rest of the world?
I think India is well poised in that sense. We are seeing uncertainty around the world. The trade tensions are only going up. From a relative positioning perspective, I think we are better off compared to many emerging economy around us. But of course, the major dynamics are still very fluid, so we see how it evolves. But what we are seeing is a good traction on volume. So if you look at US as one of our biggest trading partner, we have seen some very good growth in the retail and lifestyle segments. And even from an auto perspective, we have seen good growth coming from US as our trading partner. So we are a bit of insulated from the global uncertainty, also given our strong domestic consumption story that we have. So I think we have a relatively better poise, but let's see what happens after July. All eyes on that.
After those 90 days get done. That exactly was my next question, really. So when you look at tariffs, we've seen a lot of concerns, slowdown concerns as well come in from US. China is yet another story. How are you as a company preparing or strategizing for that?
No, absolutely important, right? So when these tariffs came in, I think from global perspective, I think for us, China suffered the most, right? Because of the massive tariff increase that were there. So we saw sudden pause. And all of a sudden, last few weeks, our capacity was open by almost 30-40%. And then what happens is because of uncertainty, you start redeploying the capacity to ensure you're not sailing the ships empty. Thanks to the pause of 90 days, which has given kind of short-term stability to the business, short-term predictability to the customers, and we are already seeing a spike in the bookings and the cargo moving from China. When you look at India from that perspective, I think we are well positioned, as I said, in the global trade landscape compared to a lot of other global economies that we have. But being US being the largest trade partner, I think a comprehensive trade agreement is super important to enhance the stability, strengthen the bilateral commerce, and also provide a bit more predictability for the businesses on both sides.
Bhavik, I remember the last time I met you guys at JNPT, there was a talk about a lot of investment pledge capacity as well and tie-ups too. So from then to now, what is the kind of progress that we've seen?
Absolutely. So I'm sure you remember we launched the Gemini network in Q1. It's a east-west network. It was designed on the premise of bringing reliability, agility, and flexibility to the network. The new capacity deployment for India, I think, means three things. It basically meant enhanced coverage for our customers into Europe and US, better planning and predictability, and last but not the least, greater control over the entire supply chain, so to say. So this for us is just not a new network, but it will help us navigate complexity, reduce uncertainty, and help customers grow with confidence. We already at 90% reliability, which was designed a year ago when we were conceptualizing Gemini. The good news is this week we also have all the ships implemented into Gemini, so we 100% phased in, and all of the results for the ships are about 90%, including the shuttles in the short run that we are having. Okay. So for India, it means better reliability for our customers doing business into Europe and US. We're already seeing an increasing appetite and want to do more business with us on this network.
How is also the collaborations within the Indian partners?
It's quite good. It's with HAPAG. So far so good. We have the similar mindset. That was one of the main fundamental reason that we see the customer the same way, we see the network the same way, and we want to run the operation the same way. And that's why the kind of collaboration, operational collaboration that we have with them. And so far so good because when like-minded people come along, and then you make it happen.
Would you, the way the world seems to be right now, Bhavik, there's a lot changing with India, Pakistan, and then with what's happening with Turkey and Azerbaijan and Afghanistan and Shabar Port. I mean, there's just so much happening. Yes. How are you dealing with it all? I'm not even talking about Russia, Ukraine, Israel, and that side of the world.
I think, the key is, how fast we can respond. I think the black swan events, which used to happen once in a while, I think they have become more norm than the exceptions. So the reason you have to build your entire network has to be built on, agility and flexibility so that you can kind of isolate the problems. So yes, it does create a lot of nuisance. It creates a lot of rework. It creates a lot of operational cost and so on and so forth. It's not easy, but the whole focus is how do we ensure that our customers are getting solutions. If there is a contingency somewhere, what is that alternative that we can provide so that they can run their supply chain very smoothly, they can meet their requirements and demands across the globe very smoothly. But yeah, it's not easy, and
it's not.
Always be on your toes.
I'm sure. Bhavik, also, so going forward from here then, you talked about sectors which have done well for you in first quarter. Yes. Is that an aberration there, or this has been a pattern going forward? What sectors are you looking at with more interest? And also, what are your plans now within India for 2025?
Yes. So the sectors, as I said, retail lifestyle will, of course, is the sector we want to focus. US, Europe are our key markets that we are seeing. We're also seeing increasing requirement in East, which is Australia and Japan, double-digit growth. Of course, albeit it's coming on a smaller base. The second sector is automotive. Both domestic sales in Q1 as well as the exports have been on the rise. Okay. We expect that rise to continue. An interesting part is it's not the usual US and Europe market. It's more of Latin America and Africa. So Latin America is coming up big time. In fact, we have doubled our volumes into Latin America. So we expect that to continue. Europe is going to be a bit more cautious on automobile, with the rising costs and also stiff competition coming from the Chinese EV manufacturers. So US and Europe, bit subdued. Latin America, Africa, we see a massive growth coming in. And last but not the least, the refrigerated cargo, meat exports, phenomenal growth, 26% year on year on reefer volumes, both combination of ease down government policies, opening trade across the world. We'll also see massive exports of pharmaceutical and shrimps into North America. Pharmaceutical also saw a good 50% growth compared to what we had used to seeing. and of course the onions and the usual fruits and vegetables that goes in. Apart from this, three key segments, retail, lifestyle, automotive, and refrigerated cargo, we see a good rise in specialty chemicals, we see a good rise in project cargo, and also commodities in general that move out of India. So the outlook for 2025, while the world is still uncertain and there is a lot of trade tensions around us, we're confident that India should deliver the plan that we have in place, given both the capacity enhancement into Europe, US, given that we are kind of insulated or in a better place compared to other emerging economy. Fingers crossed, things are looking good.
All right. On that high note, Bhavik Mota, thank you so much for joining in. And well, it does look on a positive number when we look at the numbers in sense of exports, imports, shipping, and the kind of work that is being done on the sector within India as well. With that, that's all the time that we have on the show. Thank you for watching.